All right, all you devils out there, happy Friday. Oh, let's see, it's about 1:30 now here on Friday the 8th. We're going to look at Bitcoin here just very briefly. It's moved about 24 cents since last Friday, so there's not a lot to add here. Just a quick recap review. Oh, and then I've got, we're going to look at some traditional assets here, some of the big dogs here, and we'll see if we can come up with a trade here. I'm actually going to put together an option trade. So with that, let's, let me just move my giant mic here and so I can see the chart. Well, as I said, right, this is where we were last week. So the count hasn't changed. You can see the count that's, well, implied by this is that we're looking for some sort of a diag here to finish us down here. So we'd be coming from, so it would be, let's see, I think I actually put this over here. Sorry. Okay, so we'd have, let's see if I can get rolling here. So W, A, B, C into an X, A, B, and then we're looking for this 1, 2. I put the wave on it to try and help. So you can see that. So anything really down here between 23, 21, kind of the sweet spot. So let me get all that off of there. But just you can see, I know it's a lot. There's a lot on here. It's always easier when it's your chart. So this is, I just put this here. Let me get this off now since we don't need that. Just wanted to be sure everybody could kind of see where that target was. Now, we may not make golden zone. We do know Bitcoin loves the golden zone, but 50 to the golden zone, boy, that would be, let's just call it an area of interest. So I'm going to go ahead and take the median line off, just recognizing here that this is very, very common if we're not going to pivot right on it, that the market likes to kind of wrap around it and then make a decision which side it's going to go. So this is trading principle number 3. It's not uncommon at all to see the market wrestling with that. Now, what's interesting, if I put this back a pivot here, we use the X high. We literally get it to the tick, but I mean, it's not about the chart magic. It's about is it useful? That's really what it's all about, right? Why you would put a set of median lines on. We know the algos use them. So, all right. Like I said, we haven't moved far. Okay, so let's hide that, right, having established that. So now we get a better look at it. The premise is that this is the completed impulse. Now, there was a couple of comments last week, people saying, hey, man, the X wave can't go past the beginning of W. Well, that's, maybe someone flexing some new Elliott skills. That's actually inaccurate. It can in a sideways double, like here, right? So now there's a limit to how far it can go here, but that was a mistaken comment here. Right? It's, again, easy mistake to make. It's, that's why you want to have a reference. I mean, you take a look at our Elliott Wave cheat sheets would clear that up for you. But in the sideways double, we can't have that. So WXY, perfectly valid. So the premise, again, just to draw it for you, is WXY down here. So thing sticks to your mouse. It's kind of annoying, actually. Right, so that's the corrective action we're looking for, WXY, right? It's a complicated road to get there, but that would be the target. Oh, and now if we kind of can establish here, we can see how potentially perfectly technical this all is. I've got anchored VWAP down here, right? So that's interesting here that we're stalling here. That doesn't mean we couldn't get below it, but that is interesting that we're finding some support there. Now here, the 38.50 in golden zone, and then I've got some lines here. I showed this last week. Just all I'm doing is I'm just taking the volume profile of the entire thing. So here's a pretty wide value area. You see what we tagged, right? So we got above it, now back into the middle. And here, all I'm doing is just highlighting these low volume nodes here. There's one right here you can't see because it's literally on top of the 618. So having established that, we can see here these areas, these ledges where the market might have a tendency to want to push towards. So there's a low volume node there as well, right? It's just, are we getting there? Well, I think it would be a gift from the market. So our view is almost, if we get here, great. If we don't get here, fine, right? The premise is that at this point, Bitcoin's going to need a catalyst. What's the big gorilla catalyst that everybody's got in the back of their minds is that eventually, and we give this, personally, I give it a 99.9% probability. ETFs are going to come. Right? They're going to come. And that'll be the catalyst. So we have both the ETFs and the halving approaching for next year. When the ETFs come, I wouldn't be surprised to see them come this year, at least some of them, but more will be coming. And remember, whether you put together an ETF, they got to match whatever investors are putting in has to be matched in Bitcoin. So the potential buying spree of Bitcoin, I mean, some people tell you that this is hyperbolic and that this is, jack me off, right? I mean, or I shouldn't say it that way. That's a bit crude. My view, my opinion only, you're looking at the best financial opportunity you're ever going to see again in your lifetime, right? That you could buy Bitcoin down here somewhere between 20,000 and 30,000, right? 5 years from now, if you didn't do it, I think you're going to look back at that and regret that, right? There has never been another asset like Bitcoin. It's the best performing asset of all time. And we're about to have major ETF buying. And it won't be just one ETF. It'll be a dozen, if not more. Right? So, again, it's my opinion. I could be completely full of shit. I'm just completely wrong. I could be. But, I mean, you could have been really fucking wrong buying Amazon, in 1999. You could have been really fucking wrong buying Google about the same time, 97. I mean, there's always going to be some risk here, right? Now, I'm not saying put the kids' tuition money in, but to not have a piece of this, and really, do we, I mean, if you're, again, think of a 5-year time frame. Right, if you're buying it anywhere in here, are you going to be like, oh shit, I wanted to get it at exactly 21.2, and so I was waiting for that, so it only got to 23, and I missed the whole. If we start to come down in here, that's a reasonable area to be accumulating just on that premise, right? Now, I'm giving a target down here of 21. You're saying, well, wait a minute, why do I want to start buying at 23? Because we don't know it's going. Nobody knows where it's going. Well, myself included with those long-term forecasts, but it's all probabilities. It's all probabilities, right? So we have the ETFs coming about the same time as the halving is coming. I don't know, can you script it any more bullishly, right? So why aren't we rallying now? Well, and why are you forecasting for the price to go down? Because what's the ideal scenario for whales? Right, that the people lose interest, starts to drift a little bit lower, and now they're like, oh fuck, crypto, that's so 2020. Right? I mean, they're just going to be over it, right? And that's just I mean the broad public, right? They're already over it, right? So what a great opportunity for those that keep their nose in here, grinding, going, okay, it's gone nowhere. What have we've been in this same range for how long? Right, this is our range. We've gone exactly nowhere since March. Oh, crypto's so over. So over. I don't even want to hear it. I don't even talk. It's like the butt of jokes now, actually. I couldn't wish for anything more. I mean, in terms of where we're likely to go, right? Oh, please do this. Please let me buy it down here at 21. Please. It's just me. Well, it's not like I'm just pulling that, It's not like that's not a shared impression of what's coming. And it's certainly not like the technical analysis doesn't support the idea. It does. Right? This is what now. People give me shit on a regular basis about, oh, where's the bear count? Where's the bear count? Right? You're just a fucking permeable. Well, bear count, again, not to be disrespectful for those that disagree with me. It's still bullish in the relatively short term. Okay, so something like this, WXY. Again, I'm simplifying. Pull it. Oh fuck! Here, I can't do it. Let's go here. Let's go to a 3-day. Right, pull it out. You can. Here we've got. Well, we do that. We've got to be in log scale. Pull it out. Okay. AWX. Right, and there, bears apparently think we're going sub 10,000. Right, most bears would tell you, some 3, some 0. Okay, WXY, we're going down here. God, if you liked it at 21, you're going to love it at 15. Right now, well, right, that drawdown is not. I don't want to make light of that, right? If we were to do that, yeah, people are going to experience some pain. But you know, again, go back and look at Amazon, Microsoft, Google. You know, I mean, pick your tech stock after the .com burst, right? Oh yeah, well we can't buy it anymore, right? But internet's over. That's what I think we're dealing with here, right? So the TA is, you know, it's crazy for me to say. It almost doesn't matter. If you're buying it down here, my view, again, I am not giving you financial advice. I'm giving you my opinion. My view, you could buy it today, tomorrow, the next day, every day. Just as long as you're buying, because 5 years from now, my view, again, my view, I just got to emphasize that I'm not giving you financial advice. My view is that this cute little 70 is going to be, oh, remember, that's going to feel like back when we broke $3,000. Here's 3,800 to 70. You don't think with the having, it's hard to say having, and the ETFs, I don't have enough room here. I do not have enough room here for where I think that's going. I mean, I'll just be doing that all day. My opinion. Okay, let's get off of that, and let's go to, here, what I got. All right, so let's go look at this. These are, I think, much more interesting counts. Bitcoin's basically dead at the moment until it gets a catalyst, so great time to be accumulating. Selectively, what you can afford to park there, maybe average down, as if indeed it's going to come down. Okay, I was going to do this last week here, and I'm going to pick up where I left off. I'm trying to keep these under 30 minutes, which is, for some reason, is very hard for me. Okay, so the emphasis here now is on channeling. So, okay, so here, this is the SPX, this is the index itself, right? So here's our corrective action, right? So here's COVID, right? Then the monster rally, right, is rates are, you know, essentially going to zero. Rates start increasing, right? Here's where they start hiking, which we're going to look at in a second. We're going to look at the flip side of that. Here's where they start hiking. Here's the market coming. Well, okay, well now, wow, that's quite a rip, right? Off of the 23. This is, are we 23? Yeah, off the January 23 lows. Hey, I thought with all the interest rate hikes, how could the NASDAQ be banging like that? Well, let's look at it. This is 1-2, right? So we're going to put our larger degree channeling off of the 1-2, right? So what we want to see always in a third, in an impulse, is we want to see that 3, you know, well outside of the range of that initial channel. So we ultimately would be pulling it up like this, but just so as to not confuse, right? We do the same thing here, but this time the 1, 2, and 3 are all just beautifully in alignment with that Elliott channel, which is so critical to good Elliott wave analysis, and where we see better opportunities. Now, when we get way beyond the channels, you really you want to start rethinking what you've actually got here. So, I mean, this is not a bad example, right? We see right now there's going to be overshoots here. It's very, very, very common, right, to see overshoots. It's not like you will see it. It's not like every pivot has to be, oh my God, but like it has to be, right? You're going to see overthrow on both sides. That's very common, right? Now this, of course, that was a perfect golden zone. We've looked at this before, right? It's just, right, same shit, right? It never changes, right? Same thing. Now, interestingly, it doesn't make target, but it's golden, right? Doesn't matter what the market is. That's the dominant algo. I've been saying that for 5 years, so I feel like I annoy the people that have been with me for so long. But we have a lot of new people, right? We have new members, new viewers, new subs, right? I just yesterday I said, someone said to me, what's the GZ? Right, so not everybody's familiar with it, right? Obviously, because we see, I mean, how many examples do we see of people buying or selling right into it? Most people don't know what it is. Okay, so 1, 2, right? So we're looking for a big 3 up here. Well, if I'm going to get a 1, 2, 3, well, I'm looking for an impulse in the 3, right? Everything that we all know as Elliottians, right? I mean, you don't have to be a master Elliottician, right? If you flip through Elliott for dummies, so oh, 5s and 3s. Okay, I got this. Okay, 1, 2, I need a 5 here in an impulse, right? I need that, right? If this is going to hold. Now, do we know for sure that that's coming? Of course not, right? No, anything can happen anytime. Patterns break, fall apart, shit happens. But right now, that's what we've got. So 1, 2, 3. All right. Well, we just, always a good idea to measure anything that you're in, right? Just measure it. Well, this is interesting. 1, 2, 3. I go right to the 618 here. So one possibility is you might look at that and go, hey man, that's the most probable location for the 3. Why not that? Why not that? Well, it could be that, right? But look at the 4 relative to the 2. Again, could it be that? Yeah, absolutely it could be. But the market's given us a little bit more reveal here. I'm more inclined to think that the 3's not in, right? This is my interpretation of it here because, again, I'm using the channel. Right? If I'm putting the 4 here, I don't even make the center of the channel, right? What I want is that nice balance, right? So I don't know that. Again, the market draws the channel. I'm just connecting the pivots. The market's doing it. It's not like it's following what I've drawn. It's making its own channel. Just pivot to pivot, pivot to pivot, right? So if we look here and we go, oh, okay, well, let's take this 2 relative to this 4. Again, they don't need to be exact, but okay, that's a good sign here. We just went just a touch past the 100%, right? So we have, this looks like it's a complex, right? This looks just like an ABC. So now looking here, you look at that and go, well, wait a minute. All right, if you're an Elliottician, ABC, 1, 2, oh, that doesn't look like an impulse, right? Oh, I thought we had, here's our 4 right to the channel. 1, 2, well, look, we lost the impulse, so it's not an impulse. Can't have the overlap here. If this is 1, 2, 3, oh, well, we looked at that on Wednesday in the live stream. Can't have, right? Doesn't fly, right? Even though the channel's right there, you go, well, fuck, man, what? You just spent all that time talking about how that channel was going to influence where we think it's likely to go. Are you contradicting yourself? Well, slow down. Looking at that, recognizing, okay, well, let's just for a second, let's just propose this. Let's say the 4 is going to be down here at the 50. 5's over here. And we're going to go, because you might, at this point in time, right, if you're relatively new to Elliott Wave, you might think, oh, duh. Okay, I can see it. A, B, C, right? So you might be thinking this, right? Okay. All right, I got 3, I got a B, and I'm going to have my C. So I'm going to have a nice little zigzag here. Let's take that down, put it in, let's be color consistent. All right, so I have a nice little zigzag here. Well, okay, what's the big deal? Well, number one, we'd be breaking that channel pretty hard, right? Now, so we can have the NASDAQ come down. Shit, what do we got here, right? So from that swing, 8% from here could happen, right? Possible. But now looking at this, you might look at that and go, well, wait a minute now. Let's dig in there a little bit. Okay, does that look like a 5? I mean, you could probably wedge a 5 in there. You'd have, fuck. Here, let's go to a 4. See if I can get a better look at that. You really don't have an impulse here. It looks much more like you've got just another A, B, C, right? That looks like, fuck. Hang on. Get you down there. Hang on, let's go down a degree. You got to do this or it just gets hard to follow. If everything's the same degree and the same color, right? It's, at least for me, I find it very confusing. Okay, can I get a 5 here? I think this is a better 5 here because I work backwards here. So this is the 5, 4, 3, 2, 1. It's you'd have to expand the B here so that, oh God, let's see if we can get this to fly. Right, so you need, the 3 can't be the shortest, right? So we can get just long enough here. If we have to do that, right? Now there's a little bit of an Elliott shuffle here. You're going to have to go A, B, C here into the 2 so that you're a little bit longer here, 3, 4, 5. All right. So my view here that closer, a better fit for a 3 than a 5, right? Than to say, oh, fuck, it's an impulse. Others might disagree, right? I mean, when you're looking at the actual index, right, and we have gaps through, okay, you might disagree. Well, let's just carry forward with here because eventually this is supposed to be a bit of a lesson. Okay, so if this is going to be, if you were going to go 3 and you were thinking 3, well, now you're thinking flat, right? So you're thinking 3, 3, 5. Well, there are certain requirements, right? Some of them are annoying. I'm going to show you a very annoying one. And you don't, I mean, I'm not a purist. There are rules I'll break or work around. Some people pure all the way, right? And that's just a decision you make. I'm going to show you an example of why I think at times it's just stupid. But okay, ABC, right? Now, for a flat, and this is a rule, although I would tell you a guideline, right? But the rule is the B has to go 90% the length of the A, right? So you got the 786. So okay, you might be thinking flat, but you're really doing it to accommodate what you want to see, right? Which it's not uncommon for electricians to go, oh fuck, I don't know, I want that to be a 5, so let's just squish it in there. I mean, there are times where you do have to do it. But just sitting here looking at that, my first thought was ABC. Well, this, I think we could all agree, at least at this moment in time, right? Now, this could kick up again, right? And we could change this count. But as it sits right here, that looks like 3, 3. Well, what would your next thought be? 1, 2, 3, 4, 5. Well, it could, right? It could, right? And then you'd be back here thinking, oh, wow, surprising, right? We got to the end of the channel, and we're gonna start it with a diag. Well, you've got the right ingredients here, right? So if we look here, right? You're longer here. You go 1, 2, 7, 2, right? Common in a diag. So this is going to have to go, right? So, but if it's going to be a leading diag, right? If we go from here, we've got to be longer, right? The 5th has to be longer than the 3rd, right? So the premise being, if this is going to be 1 and you're going to count that as your 2, and we're going to get a diag coming out of here, boy, you better get a big rip here, right? So next week, and going into the next, whoa, fuck, what are we talking about there? Well, next couple of weeks, we better get a big rip roaring push here in the QQQ, right? We better get a big push. Well, what? Okay, we might. But as it sits there right now, is that your first thought, right? That, oh, shit, okay, well, okay, I can see a 3, I can see a 3. Oh, well, okay, I want it to go higher, so diag. I think that's hopium trading, right? But let's consider the alternate, right? What is the alternate that might fly here? Well, let's rethink it, right? Since we got a 3 followed by a 3, what's an alternate that we could consider, right? Because the zigzag seems less likely, not improbable and impossible, just less likely, right? I mean, if we fly out of here and this turns into a diag, well, fuck, we'll probably be back here, working through that, going, okay, I guess I can squish a 5 in there. But right now, let's go with what's clear to our eye, right? I mean, really, right? Are we really going to argue about that being a 3, or this being? That's like saying, oh, that's not a 3. No way. Well, okay. So again, I'm just trying to get you to think. Well, if you're looking at that, what's all hopefully, right? So I know my advanced members have already considered probably having it within their count structure, or at least one of their options. Well, let's consider the possibility here. Oh, let's do it this way, right? That we're going to do this as a series of 3s. So your one thought would be WXY. Right? So, I mean, you certainly go, oh, ABCW, ABCX. Oh, we're looking for ABCY. Well, remember, I'm looking to try and stay consistent with this channeling. Well, how could I do that? Well, one possibility is we're going to do a series of 3s, right? Something like this. Now, we can get outside of that channel. If we do, I'm quick to do this, right? I'll clone them and then bring this down here so I get a sliding parallel that's exactly equidistant, right? So I get that sliding parallel. If we're going to come out of this, right now here, right, as we see it, right, it's perfectly self-contained. Okay, but then you look here and you go, okay, well, okay. Triangle. Okay, well, triangle is going to need to cooperate within those boundaries. So this is, it's tricky, and it's a lot to, that could come lower, right? It's a lot to forecast a triangle when all we have is just the potential AB in it. Right? You're making a lot of presumptions here, but this to me seems to make more sense. Right? We get the 4 in here. Now again, that's a lot to forecast, right? When you don't have it, but I think what we'd end up with here is a better looking. What? Pardon me. This would be up here, and this would be over here, and this would be up here, right? So now we can have a little overthrow, but we stay right in here. Now, if we start to break, right? This is the benefit of come here. The benefit of this is that if we break here and we get some sort of aggressive move down here, well, we know, okay, not a triangle. Well, now what are you back to? Well, now you're back to WXY, right? Rather than squishing a 5 in here, there's the 3, and you're going to go into a zigzag. We're going to come down here, you know, major sell-off. It's not that we couldn't, right? Now, where would we? Oh, fuck. Yeah, well, we'd be back here. We'd be back here to doing it like this. You'd be back here to this saying, okay, well, that was the 3, right? We can't eliminate this possibility. Okay, there's the 3. Okay, 4, right? Where's the high probability for the 4, right? Well, we'd have to pull that down, right? We'd have to pull this down because we'd be working off of that 2. So, hey, there's the 38. So maybe you end up with a WXY, right? You get WX, and you're going to go A, B, C, something like that. Right? Pop it in here. Now we got a combo. WXY. Barring the unforeseen, you know, I don't know if you need a black swan, but you might need a gray swan to cause that to happen. Wait, we don't have a lot on the calendar. What do we got here? Oh, this was nothing we need there. Okay, right. So there's not a lot on the calendar, right? We do have the Fed, you know, early. We have Fed coming, right? But we got a little time. Oh, it's not even on here. I'd be looking for that kind of thing. Now, if we're seeing that in NASDAQ, right, you can expect to see that in potential, right? That same kind of setup in the Magnificent Seven, right? I had someone ask me what the Magnificent Seven were the other day. Well, I think most of you will know what that is, right? They essentially are the NASDAQ, right? They're damn near the S&P. But certainly Apple would be one of them. So if we're going to see this in the NQ, right, you might expect to see something similar in Apple, right? So here's the exact same thing. I'm going to have to get a little ahead of it here. Okay, so let's pull that off. All right, so here's Apple, right? So here's the COVID low. 3, right? Beautiful finish into this 3. WXY. So there just is the alternate, right? So you might have been thinking, oh, it's going to be a triangle here, right? We end up with the WXY. So here's forecasting, right, for a possible, that's taking the length of the 1 projected from the proposed 4. Okay, well, if this is a reasonable candidate for the 4, high probability zone for a 4, 23 to 38, right? Right where we hit it, we come back into this cluster. Oh, if I were to draw, right, which is a good practice, right? If I were to draw that volume profile there. Oh, okay. Well, it makes sense. Look at where the value area is. Right, from the 38, right up to the edge of the highs. All right, staying in this range. Now we're pushing out of it. Okay. Right, so reasonable premise here that the 4 is in. Okay, up here goes Apple. Well, all of a sudden now we have Apple. Oh, wait a minute, Chinese are banning their government from using it, or their government employees. I don't know. I read some analysis yesterday because I was immediately thinking, oh my God, we have an opportunity to buy Apple. Okay, apparently it's about 500,000 phones. It's not a huge number, right? And I was listening to Dan Ives and reading some of his research. He's one of the top Apple analysts. His numbers are suggesting 65 million iPhone 15 sold in China next year. So, okay, right. So what? The sky's falling? The top is in? For Apple? Okay, well let's just consider the premise here. I've got, if this is the 4, right, which is reasonable at this point in time, right? So what you'd be saying, oh, WXY, what, we're doing another X up here? No, that would be well beyond that X. That doesn't fly. So WXY into the 4 is good. Now we're going to finish this in that 3 in Apple. Maybe. So what do we see here? Right, same scenario. 1, 2. Now let's get our channeling on that. All right. I'm going to bring it down to the 2. Right, so we're well beyond, so now I'm going to do that same thing, right? So we're going to clone that. Now you might look at that and say, oh, come on, man, you're just doing that to make it fit. Well, look, maybe. All right, let's zoom in there a little bit. Okay, well, I can get a 5 here, right? It's much cleaner here than I can get a 5. Right? I get a better 5 here. I don't really want the 5 here. So I've got to look at this and go, oh, I need this to be done in a series of 3s. Well, how am I going to do that? Well, all right. So so it's here because of the premise that the other possibility here is that we are going to do a zigzag, right? So if it's 5, 3, and this would not be where we'd be doing 1, 2, right? And so we're going to know pretty quickly if we break this, right? If this is 1, and well, we didn't even make the 50, right? So that'd be a mighty shallow 2. If we're going to go 1, 2, 3, 4, 5, what apple down to, well, let's just look at what that would be, right? Always better to measure twice, cut once, as they say. All right, bring an apple down to 165. Well, that seems reasonable. Down to a 50, 159. What's our high here? 197. Maybe, right? So and I literally just put this trade on here. So the downside of this is we've got to look at this as a 3. Now, how are we going to do that? You can't do it. You can't see it on a daily. Let's see if I can get it on a 60. Working back here. So this has to be your C. So you're going to have to do it this way, right? So you're going to have to get a. Oh, looks like we got triangle B. 1, 2, 3, 4, 5. Right? So you're going to have to do it that way. So now you got to ask yourself, is that just a force fit? Is that just an Elliott shuffle there to accommodate the fact that I kind of want this to be a triangle? Maybe. Well, you might have to do it right here, right? 1, 2, 3, 4, whatever this is, doesn't matter, right? Sideways, 5. Well, the beautiful cell was up here. Now it's tricky, right? Because we got on the other side of the 65, right? So again, but for a B, right, it's very common, right, to go up to 786 or higher. So a little tricky, right? Now, one of my members here happens to be a brand new member, and he's a young guy. He absolutely nailed it, right? We went over it in the live stream on Wednesday, right? And he was right here saying, "I'm thinking it looks to me like we've got a zigzag here." So right with the 3 up, he got all of that action. And big congrats to him for that. And he's a new trader, right? And he's learning. He's off to a good start. Okay, so 1, 2, 3, 4, right? Same idea here. What are we looking for? We're looking for a 4. So let's go right here. So we've got a range here. So I think one of the possibilities here, despite that it's a little bit of a hopium hit in that to turn that into a 3. If I go 3, 3, now to qualify this trade, I got to come back here and do another 3. Like mandatory, right? Now, if I start to go here, we got to rethink the whole thing. But what we'd be looking for is that, right? So D, E, 4, right? So this, goes right here. 4, coming out of here. So the trade I just put on was because I think this is more probable than that we're going to collapse down here. Again, I could be wrong, right? So you got to manage the risk. I think this is more probable here for the next, we don't have, we've got earnings we got a ways off here. Oh, there was some news here, I'll let you read it. That we're going to we might stay sideways here for a while, right? So in a sideways market like that, after this big rally and we consolidate here, what are we looking to do? Well, you might say, okay, I want to sell, look up here at the pivot here to the pivot here. So if you look at that range, it's from 190 to 170, right? And you're not anticipating a big move out of here, right? So option traders look at that and go, oh, juicy, right? What an ideal scenario. So what we could do is just put on what's called an iron condor. So you're selling a call spread and you're selling a put spread. And the premise being that you've got a nice wide range here. So if I did it like this, you've got this nice wide range here. And as long as we stay in that range, or we don't go too dramatically one side to the other, you would not have unlimited risk, right? That's why you do it as a condor. So if it were to do that, right? So you're going to be certainly losing on this side, but you're making on the other side. Now you wouldn't, if you had something dramatic, you'd want to look at, probably rolling the puts down, right, to try and stay at break even or close to it and make all your money on the calls. If we're doing that, but then again, if we're doing that, okay, let's just think that through, because you need to, right? If we're going to go A, B, C, right, here's the most common location, right? A, B, and we're going to go 1, 2, 3, 4, 5. Oh shit. Get that out of there. Oh, let's just do it this way. Right, so always, right, I want to measure. Right, so, oh, pardon me, I guess I did have it. Here's the 100. If this is going to be A, B, and we're going to go 1, 2. Let me get that out of here. Ah, shit. Trying to do the measuring for you. Okay, so let's hide that just for a second. All right, and say, oh, nope, it's not. It's going to be a zigzag. The 4 is going to be way down here. Well, if it's going to be a zigzag, okay, we go back to this is a 5, and it reads like a 5. It's better 5, right? I see that. It's not like I don't see that. Okay, so let's go 1. Oh, fuck, I keep doing that. I want to do this. I want to go 1, 2 here. Okay, if this is, let's use our golden zone. Okay, so let's use this. We'll kind of split the difference. All right, so if this is going to be 1 and we're going to go 2, oh, here, I'll just put it right here. All right, so where's the high probabilities locations for the 3? If it's going to be 1, 2, we're going to go 3, 4, 5 into a zigzag. Well, okay, certainly 100. Next up, 1, 2, 7, 2, most common. Right? Well, pardon me. If we're going to get an impulse here, yes, most common would be the 1, 6, 1, 8, right? So we'd be essentially laying this out as 1, 2, 3, 4. Oh, let's just do something like this. 5. It's not the 4. If that's what's coming. If this is A, B, well, let's bring it up, right? And say, oh, wait a minute, that's way too much. It's not going to do that. It's going to go to the second most common. Not an impulse. Okay, well, so it's just gonna go right here. And we're going to just barely miss it here. That's what you're forecasting. Right, we're not going to overlap the 1. We're going to come down here. Now, wait a minute. Now, what happened to my channeling? Even if I do this, I bring it down here. We're way outside of it, right? And something I've told you for many times, well, certainly members, right? You kind of come to me to get some of this education. Right, this, right, it's just like the channeling. We don't want to be connecting this to this, right? It's way too far off, right? No way that's a 4, right? No way, right? It means, okay, right here, I'm already having to put a runner on the side of it. But to bring it down here and say, oh, there's my 4 because I did a zigzag here, 5, 3, 5. You're recounting the whole thing, right? So this becomes, fuck, at that point in time, you're definitely putting in an intermediate top. So you're going to be doing something like this, which doesn't quite, right? So you're here and Apple has topped, at least temporarily, right? So let's go back to a daily and say, okay, does that make sense? We're going to top right here, the most profitable company in human history. All this comes off of here. All that comes off. Oh shit! Can't get it. All this comes off of here, and this is going to be our 5 up here, relative to our 4. This. If we do this, what's more probable? 1, 2, right? Well, you're already having to struggle, right, with this as a 5, right? So this, it's funny. This 5 is about like the 5 in the first A wave, proposed A wave, right? It's not a 5. I mean, can you squish it into a 5? Yeah. Just like you can squish this into a 3. But that sure looks like we've got our impulse here. Right, and we're looking for the 4. Right, so shit, got way too long there. God damn it. There's 39. Well, that cuts into, I'll do less. Okay, so I'm trying to make these shorter, and I'm just not good at it. All right, okay, all right. So I'm playing this as a candidate here for a triangle here. So just using that range that I just gave you. Right, so right here, 190 to 170. Right, seems like, right, I'm not saying it's going to be there for the next 2 years. I'm saying for the, maybe for the next 2 weeks we stay in this range, and so you can put on a Condor. Now here, this is a product that I've demonstrated here. It's in our link tree, right? They have a free version, right? It's really, if you're new to options, a great product. If you're not new to options, a great product, right? So I'm not, of course, some of them think or swim, some of those, right? They have it built in, but this is just very, very, very user friendly. So let's say the current price here. Oh, where is Apple, right? So where is Apple? Apple is oh shit, no, I'm not going to be able to find it. 178. Okay, so well, this is reasonable, right? So we're looking for it in between 170 and 190. So something like this, an iron condor is perfect, right? So all you do is just go to Apple. Here's the current price. Say I'm neutral, right? Because we're kind of looking for that range to stay consistent. And then I get 3 choices, right? So I just go neutral and up, and I put in a budget of, let's say you want to allocate 2,000 a margin towards this. Okay, it's going to give you 3 choices here. Well, you'll note here, I've got an iron butterfly. That probability of profit's only 40%. I've got an iron condor. That's 63%. And then I have a short strangle, right? Which the probability is 90%. But the potential profit's only 109, and unlimited risk on either side, right? So we're definitely not doing that. So to contain the risk, iron butterfly or iron condor, this looks better to me. Right, so I've got, sizing is all relative to your account, right? But look at here. Let's do it this way, so I can, for the range here, I can bring this up here, so we get a nice look at the range. Now, note here, right? There's risk on the edges, on the wings, right? We've got risk here, but it's limited. Now, upside's limited as well. So the potential here, net credit's only 156, right? Well, you don't have to do 1. Right, you might do a little bit more than that, and that's going out to October 20. Right, so we're a little over a month now. The idea is not necessarily to stay in it until expiration, although you could, right? So if volatility is actually, so the volatility is actually lower than that. So but I'm just pumping it up just so you can see, what's that going to do to it? So you can see 1 to 2 standard deviations here, right? So there's 1 standard deviation at volatility of 17, which is about where it is now. It's actually a little bit less than that. So you've got a nice 68, so call it 70% of the price action here at this current volatility level, likely be between those 2 strikes, right? So selling the 170 and the 190, protection on either side. Now you could go a little further out. You could do 170 and 90. That's what I did. I wanted to show it to you as conservative as it could be, right? So now we got a little bit better here. So our max profit's 238, but we still have that open-ended risk. Pardon me. We have risk on either side, right? So a Condor, credit spreads, anything, they have terrible risk reward. Terrible. Right? It just comes with the territory, right? There's always a trade-off. I've got a 77% probability of profit. But if we get a black swan or market rips, well, you're going to have to manage that, right? Either close it, right? You don't want to let it go into the money and then try and fuss with it. So if it starts coming towards one of the options that you've sold, well, if it's coming towards the puts, right? Because the implication in our wave count was that could be a zigzag. Well, then we're coming much lower. Well, then we could roll down, right? So you buy this piece of it back, you'd have profit here, right? One side's going to have profit. So you might roll this down to the 150, 130, right? You might take a small loser there. You might be able to do it at a credit, depending on when you do it. You're going to make money here, so you might push the whole thing down. So then you might sell the 180 and buy the 190, right? And just continue to try and center it based on the volatility. Now, a black swan, something serious is happening. Well, that's why you have protection down here, and you can roll, right? There's a point to where you go, okay, that 1, 2, 3 rolls, probably enough, right? Probably if it's 3 rolls, right, we're going deeper here, right? And perhaps, right, the top is in as we just looked at, and you're gonna have to go 1, 2, 3, 4, 5, and this is a 2, because I think it's unlikely that we've topped. Now, again, I could be very fucking wrong, but that doesn't look like we've topped. to me, right? But possibly 1, 2. All right, shit, 44. All right, that's all I got. I can't do any more than that. I had 3 or 4 other ones. It just they run too long. All right, I can look at the watch time and people they lose interest. All right, so I'm gonna go ahead and stop here. So we got 2 here. The option strat, great product. Again, they have a free version. So if you just want to noodle around with it a little bit, just there's lots of content. They have their own YouTube channel. I can't do a full training here. It's very easy to use. But if you have no background in options, maybe do a little paper trading first. If you have just some basic knowledge here and you understand what you're doing here by selling spreads on either side, something to look at, right? Again, very, very reasonably priced. Even if the paid version is, I don't know, $49, something like that. But the free version is very effective. And then they have all sorts of cool stuff in here. They got the flow, right? So you can see what's going on in the market here. Oh shit, I thought we did, right? So this is kind of like where's all the action here? I tend to do this, right? I do these. I want to see spreads, right? I want to see the spreads that are going down. What are they doing? If I go to the live flow, I can see what are they doing, why are they doing it here, right? So very powerful. It's very common with these kind of products to have live flow, right? Everybody figured out how to get that data. So you can get that in real time. That's just what I do, right? I look for these kind of things and go, JP Morgan, right? Somebody's doing a put spread. Why? Right, reverse calendar. I mean, some of this, right? And you can always just click on it. It'll put it into this. It'll put it into your this format here, so you can see what it is. Great product, right? Again, our link is below. Oh, if you wanted to support our channel, right? It's not a big deal to us, but if you wanted to do that, we'd appreciate it, right? So there you go. Okay, so with that, I got to wrap. God, I had 4 of the things lined up here, but I just can't do them in the amount of time I have, right? So I just put that trade on the 70, 200. Pardon me, I sold the 170, bought the 160, sold the 190, bought the 200. We'll see, right? So I'm very cognizant of if the market starts to come down here and we break this line here and we start doing this, well, time to at least roll once. Right now, if it's going to go zigzag, well, okay, something else going on, right? Then I just close one side, take the loss, take the profit up here, and then reevaluate. Do I want to be direction neutral, or do I want to be now with a directional bias? Right? It's just another dimension with options, right? But it's not if you've never done it, if you've never traded with them, you got to do a little research, a little understanding. God, there's 25, 30, 40, 50,000 different sites where you could learn option trading. So lots of them. And Option Strat has a good one, right? That'd be something to consider. Okay, I got to get out of here. God, I talked too long. Okay, with that, I'll wish you guys a good afternoon.